Thank you, and welcome to everyone who joined us today for the 14th Asia Bond Market Summit. Last year, if many of you who attended, we zeroed in on technology and its impact on the capital markets, which remains, of course, a very hot topic. This year, we are examining another aspect of future finance called avenues for sustainable capital markets.
I think despite of headwinds, actually the sustainable finance market is doing well. The total issuance size of sustainable debt has surpassed $1 trillion.
So in Asia, we haven't seen that same kind of level of dedicated money for green or ESG. So maybe the pricing benefit is not immediately obvious, but we're seeing that in the books. So in terms of potentially more demand. Linking specifically a sustainability linked loan, that's why I'm pretty excited by that development, because it's far more flexible. So it gives access to a broader range of types of clients into different sectors, etc. But it does deliver to the CFO a pricing benefit if the company delivers on whatever the KPIs are that are set.
China is much more supportive of technologies to improve coal as something that can be defined as green bond, which is not true elsewhere. And I think one of the reasons for that is the top-down government view is that actually pollution is just as important an environmental issue as climate change, whereas that balance is different maybe in elsewhere.
So dealing with our treasury team firsthand, when we bring a green or a standard transaction to market, our treasury team often looks as a green or sustainability themed issuance as a form of risk mitigation. So in uncertain times, volatile capital markets, we see that demand will be there. There's a continuing flow of funds into this space seeking sustainable investing.
Green bond, green financing has been a pretty hot topic for the last 2 to 3 years. More so, I think there's also a growing interest in other, sustainability topics. Our topic today is really on gender, the challenges of women entrepreneurs in getting financings, and certainly, there are a lot of research that's been done to actually support the fact that women entrepreneurs or women and leaders can actually contribute a lot to the society.
To give you a sense of urgency in this regard, according to the World Economic Forum, at the current rate of progress, it would still take 200 years to close the economic gender gap. And so that's 200 years of lost GDP growth.
First of all, from the technical perspective, this women entrepreneurs bond had to comply with ICMA social bond principles. These principles, it's mostly centered around use of proceeds and also reporting once the proceeds are deployed. We had to make sure that we can work with a counterparty who can deploy the funds effectively and report back on it effectively, because we have some very specific criteria in terms of what we consider as successful deployment, how we can get proper bang for buck.
There's a lot of dry powder on the side from the PE funds, right? They have always been on the prowl for opportunities. I think what will help them in this cycle or the coming 1 year or two is that with all the macroeconomic headwinds that we are facing, I think we are seeing a slowdown in strategic activity.
The broad bucket of risks around sustainability clearly covers what many people might think of first up being the environmental related risks. But of course, in that sustainability bucket, we've also got social risks, and sometimes as well governance is put into that bucket. I think where we are in terms of sort of trying to assess those, clearly, if we look at just sort of social risks, I mean, the concept there is clearly an assessment that if we do things that are not fair to society, and if we act in ways where we're not inclusive, then there will be costs associated with that. They could be everything from loss of productivity to loss of markets, loss of customers, and of course we might find that as institutions we might get fined for those if we step outside what is under regulation or law considered to be fair or inclusive. So there's a whole suite of sort of social risks there.
I'm very, very encouraged to be on this panel because I'm pretty sure 2 or 3 years ago there probably would have been a discussion more about how do you do a green bond, how does it price, does it save me money? Whereas I think what you're hearing on this panel is this is a much broader conversation now where it actually impacts every single investment.
If you look back 20 years ago, what was considered Sharia compliant in this part of the world was debated, was disagreed upon. That is actually compliant based on the principles that were adopted by the scholars of the Middle East. It took years to get that kind of uniformity and conformity, and I foresee that to be the same as well in the ESG space. What's happening in our markets is that the key pension funds are actually telling us, fine, I recognize that there is no standard definition. You tell me what your definition is. We'll start from there. And then as we go along, over the next 3 to 5 years, then we'll get to a standard benchmark where everybody will be on the same page in terms of what should and should not be considered ESG.
Massively well attended. I think it just kind of shows the importance of ESG and ESG financing as something which is top of mind for everyone. Certainly in terms of the gender bond panel, I thought that was kind of hugely interesting. And certainly, as Augusto had said, it's an asset class for us to watch, because I think going forward there's going to be a lot more issuance activity from this particular segment.
There's a big opportunity in the market again for transition type financings, which is growing. The market's currently assessing how to do that. There's some good opportunities in Asia for those transactions to be supported and done. It's not just about green or brown anymore, it's about that in-between part and how capital can move so the world can move quicker to solving some of these bigger ESG and sustainability problems.